If Delta is the holy grail, AI will take over our job already. Delta is just one thing. People like if they just trade straight from Delta, they're very mechanical. It's like, Cody, I open trade today, I close tomorrow, I open trade today, I close today, whatever. But a lot of times they forget to look at, there's Black Swan event, there's Donald Trump event, there's FOMC event. There's a lot of variables out there that will screw those Delta, screw those 75% within the day, right? The moment you start getting closer to your stop price or your strike price, all of a sudden Delta is like, oh my God, like Cody, like it dropped really fast. And then when below is like, okay, Cody, now it's 1-to-1 now. Like, what's going on? Right. So like, I don't think probability could be looked that way, but there's no formula you can calculate. A black short is just a very rigid formula that kind of tells you, but that's not the real probability. That's why our team are always looking at how do we dodge some of the event. We're okay leaving a little bit of money on the table. We look at, for example, Liberation Day. I was telling my team, Liberation Day, okay, more upside or downside. Everyone's like, downside. Exactly. So if we have bull put spread, can we close some of it? Only leave 25%. They're like, yeah, it kind of makes sense, because what's the chance that will go up? Is Donald Trump going to say, I have mercy for you guys, but he's like going to do something innovative that shock everyone anyway, right? So the chance of the upside will even staying still, it's so low. So we actually should have some bear call spread, more bearish position, not too much, more neutral and less bullish position. So that's the way we position it, right? We have a little bit of bias, just based on, not just based on technical, not based on just Delta, be like based on what Donald Trump is going to do and how people is going to think, react to it, right? So that's kind of like, how do you quantify that?
Markets, speculation, and risk. This is the Chat with Traders podcast.
Welcome to Chat with Traders. We're in episode 297. Oh, what a crazy market it's been, huh? I hope you're all doing okay out there in the markets, whatever your trading situation, protecting yourself and your psychology, your positions, and waiting patiently for the right opportunities to show up again. This is Tessa, your co-host, and I happen to also be a developing trader like some of you, working diligently every day on my trading. My trading journey has been rocky for a long time, but I have to say for the past year now, I have been intentionally learning, gaining experience from every trade so that I can accelerate my trading progress. What about you? How's your trading going overall? Are you happy with your progress? What do you think you're missing, and how can you make your trading simpler if possible? Those are the two exact questions I ask myself a lot now to help me focus and refine and improve my system and process. I just thought I'd share every so often with you a little bit from my trading journey, and hey, feel free to share yours. We may end up reading what you're willing to share on the podcast, just like they used to do back on the radio, remember? Well, for those of you who do remember, what do you think of that idea? Okay, hold that thought while I get us back to the main part of this episode with my co-host Ian Cox, who had the opportunity to chat with Cody Yeh, a former engineer turned trader and investor and entrepreneur whose number one goal is always to preserve his capital first, and growing it would come second. Maybe this might not sound as thrilling as you might hope, but as you listen to his story and journey into impressive double-digit returns and how he describes his three main strategies, which he calls it his fast, medium, and slow money, diversifying in different strategies and timelines, allocating about a third for each strategy, the practicality of it all is actually quite remarkable, building his edge through teamwork, structure, clear rules, and consistency. His approach to the financial market is all about trading less, but earning more. Is that possible? How does he do it? Well, let's dive into the conversation now. Ladies and gentlemen, we're so pleased to introduce Cody Yeh from our respected neighbor to the north, Toronto, Canada.
Well, Cody, what a day to have an interview. Markets in turmoil. VIX is spiking. Great time to do some options.
What opening? Yeah. Like for people who's listening to this, Apple dropped 9%, since January 2025, it hasn't really dropped much. So we're definitely seeing a lot of opportunity. I have a lot of cash sitting on the side. So I have my target price set. And as some of the stocks did almost reach that point, so I have some limiting order to buy. But in terms of option, it's very tricky because this drop, since the height of all-time high of January, we haven't really seen any rebound, and that's usually, for the last 2 or 3 drop, like it's been kind of like this. Usually, you kind of drop and it rebound and it drop more, but last few times it's just pure drop, right? So it's kind of scary, definitely. And at the same time, my team and myself, we've seen different scenario, but every time is kind of different. So we just had a meeting yesterday for about an hour and say, hey, how do we, always learn from mistake and moving forward? But we don't really see a bottom yet, right? I would say the bottom will be when all the corporation come out and announce that, hey, recession is really here. And I think that'll be another 1 to 2 months. I don't have the crystal ball, but I'll hang tight and don't over trade because who knows? It can drop to 5,200 S&P 500 really. Right? I don't hope it'll go there, but it's very unpredictable. So definitely tone down your account size and don't do crazy things at this time.
Well, fantastic, Cody. I'd like to welcome you to Chat with Traders.
Thank you.
Yeah. And before we dive into the turmoil going on in the markets, I'd love to dive into your background. Tell us a little bit about kind of where you grew up. What did you study in school? And
yeah, so I grew up in Taiwan. I'm a typical kid. The exception I will say I have is a little bit of athletic talent. So since I was a kid, I was playing a lot of sports. I have a lot of medals, trophies, all in sports. Nothing in music, nothing anything else. So, there's a saying in Chinese that you're very agile on your limbs, but you're not very developed on your brain, sort of saying. So I thought I was that person. So I'm very easygoing. Grew up in Taiwan, and at that time, my family's, my dad has a really good job, but he's not very good with finance. So I think growing up, I was inject a lot of scarcity mindset from my mom. Because there's a few calls where there's margin calls. Call my mom and my dad need multiple 6-figure USD in 15 minutes. So I think my mom was very shocked by it, and I think that really kind of planted the seeds in a lot of what I do. Try to have financial freedom, independence before I come to Canada at the age of 18. So yeah.
Mm-hmm. And so what was your family's attitude and cultural attitude towards taking risk and stock market in general?
I didn't have the best education for that, to be honest with you.
Mm.
Up until the age of 18, I was that kid, grew up in Taiwan, went to one of the best schools, just study. I go to school at 7:30 in the morning. I leave school at 9:30 p.m. at night. So
Wow.
there's not much other than extracurriculum. It's all math class, this and that. There's no like read Warren Buffett's book, read Charlie Munger's biography. No, nothing like that. It's really until I come to Canada, and then I guess the reality sets in, right? In Asia, I don't have to make any of my decisions. Just I go to the best school, you have the best job, and then we all kind of know that's not the truth, right? You don't have any critical thinking. But really, when I came to Canada is when everything just kind of hit me in the face. I remember my first day when I went to U of T, so University of Toronto, considered one of the best school in Canada, and went to engineering school. I remember first night I sat in my dorm. I have a roommate. He's not arrived yet. I never live on my own really. I don't have any pillow or bed sheet, so I literally just slept on the bed without any bed sheet. And I was thinking, but oh my God, this is for real. So if I get kicked out, I will be that kid, came from Taiwan and spend all the parents' money. I'll crawl back there with tails between my legs. So I'm like, oh my God, I better not do that. Right. So that was like when reality really sets in for me. Right.
Mm-hmm. And then how did you get introduced to the financial markets, and when did you open up your first trading account?
Yeah, that was, I remember, second year. Engineers, we still learn about accounting and some corporate finance, and I chose elective to really learn more about how to invest, because I chose engineering not because I have passion in engineer, to be honest, was because stereotypically people from Asia are better trained in math. So I just in that top 25% percentile. And I hate writing reports, right? Because I was struggling with English first coming to Canada, and I couldn't read a math 12 question. So I chose engineer. And I was like, okay, engineer, if I graduated, I will get a decent job, maybe pay me 60K, maybe 80K per year. But I know that's not going to get me rich, but I'll be independent. So I'm like, I'm trying to start learning, how does people really get ahead in life, especially when they start kind of from middle class or nothing, right? So that's when I'm like, okay, like Warren Buffett learned from stocks. And that's when I like open my broker account, $1,000, $2,000, a little bit if I put in boring stocks, the bank stocks. And I'm like, this is kind of boring. This is kind of boring, but that's how I first learned, right? Learn how to read the financial statement, balance sheets, and, going through corporate finance class, but didn't really learn much besides how to derive, how does a formula of a Black-Scholes formula for option work. But now that we all have computer, but back then I was an engineer, we have to derive everything. But, kind of helped my math skills, but doesn't really help in the grand scheme of things, right?
And so you started off with kind of a buy and hold stocks, for the long term? And did you feel tempted to get into actual trading to make more money after all, right?
Yeah, very good question. So, as a second year in university engineer, like everyone's very competitive, right? Some of them are getting the best job at McKinsey, some are getting an oil job. You're like, oh my God, okay, I'm getting a manufacturing job, internship. I'm like, okay, how do I get ahead in life a little bit? I was working a lot of overtime, but I'm like, you know what? I was doing that for 3 years, but it's very boring, right? Banks, okay, 3-4% dividend. Okay, sometimes it goes up, sometimes it goes down. $2,000 is not going to be changing your life, right? So really, I was like trying to learn all these stuff, reading the technical, which is like, most people who started reading these books, and I have all these books in Chinese, actually, not English at that time, because I was introduced to a friend. This friend works at the broker, one of the biggest broker in Taiwan. And, in Taiwan, there's some room, back then, 2015, there's like these VIP rooms where a lot of people trade a lot of volume. They get to be in the VIP room and they can negotiate their rate. So they introduced me to this young lady, 24 years old. I really don't know her. She doesn't have a YouTube channel or anything. But I was introduced to her, and she said, well, do you want to invest money with me? I'm kind of managing money. I'm like, no, I don't have much money, but can I learn from you? Can I pay you? And she's like, I don't take student. I mean, I have no time for that. But if you want to shadow me, right? So I was shadowing her for 2 years. And that's how I got dragged into day trading, or really scalping the future options of Taiwan, right? Kind of like the NASDAQ, so kind of like the NQ, kind of the SPX of Taiwan, right? I didn't know much what I was doing. I was purely doing technical, and I was trading from Canada. And the reason why I was doing Taiwan is because there's a 12-hour difference, so that I can do it at night while holding a full-time job as a project manager. So that's how I got started for 2 years. And yeah, I mean, if you really want to hear about the sweat and tears, then we can get into it. But
I see. And how did you do in those early years, and what did you learn from this
first
scalping?
8 months, straight up lose money, grinding down. I have the risk management sort of, only use, 1 to 2% of your capital. But I was grinding down, right? Every time the market pop, right? And then it blow through my stop loss, or sometimes blow through my stop profit, and I wait, and all those gains are slowly getting grind down. And I was telling my so-called friend, coach, she's like, don't call me coach, I'm not your coach. But I'm like, why are you making money while why am I not making money? Because I spend the same amount of time as you. Pre-market 2 hour, trade for 2 hours, I write report for 2 hours. She said, well, you don't have the experience. And starting the first 4 months, she was losing, right? So, back then I thought I have a system. I thought technical was everything, but I didn't know how to digest all the news as of yet because I was so young, right? I was like 24, 25. I didn't have a life experience of when someone says something like Donald Trump right now, it might not be real. It might not be a negotiating tactic. Whenever they say something, it might actually be the opposite. They're trying to save themselves, right? So I didn't have those wisdom back then. So I was literally just looking at technical analysis and, I paid the price for it. Second year was a lot better. We make 66%, but, $10,000, 66%. I mean, it's not life-changing, right? And then I found that it's actually very hard to scale. So, that kind of got me thinking is that, can I do this for my whole life? Because I was giving away a lot of my weekday nights, a lot of my weekends studying. And, I had a girlfriend at that time, now my wife, but thank God she's still with me. But I just wasn't sure if I can do that for 10 years, 20, 30 until I'm 80, right? Having that mindset of always need to be a top athlete, kind of like driving a cockpit all the time, having 8 screen. I only have 2 at that time, but I just don't think that's the way I want to go with my life.
And so did you switch into a different strategy on how to handle your money, where to invest?
Scalping, that side was fun. But then in the meantime, I was introduced to option, reading a few books, reading about Warren Buffett's financial statement. I found there's one line they talk about derivative contracts. I'm like, what is that? They're making $1 billion, $2 billion per year. And, I started looking into, Warren Buffett actually, sold some put options on the SPX back in 2009, and he make a lot of money on it. So I'm like, what is that? Like, seems like he's on the winning side of it. And that's really when I start going to like options, what is option? It's a little bit more complicated than stocks. It takes a little bit more time, but there's more variable, but you can have more control if you know what you're doing, right? That's when I start looking to how can I spend less time and then yield the same result, even with less results. The return, the ROI on time and stress is a lot more worth it, and a lot more sustainable, right? So that's when I started getting into option.
Yeah, many traders and investors get accustomed to options from the standpoint that with a very limited amount of upfront investment, they can have high levels of leverage and make so much more money than they would if they just bought the stock. So were you seduced by the incredible potential profits of buying call options and letting them rip?
It's very interesting. So early on, I was never attracted to that. I don't know something's different about my brain. I was never that guy that I want to hit big, but I was that guy that how does the rich people keep their money? Because I'm an engineer. My background in math keep telling me, Cody, if you make 100%, okay, let's say you have $100, you invested, you lose 50% of it. Next year, you need to use the remaining $50. And to even come back to $100, you need to make 100% now. So I'm like, the math doesn't work that way. It's not always about go, go, go. And, I start seeing a lot of people, kind of having a quick success but blow up their account because they have that gambling mentality, right? So early on, I keep telling myself and reading all these books is like, these rich people don't really buy option. They actually sell options a lot of them, whether that's scalping, whether that's wanting to own something they want to own for a cheaper price, or just getting into something they want for a cheaper price, right? So that's what I'm drawn to. And, most of the time when I buy calls, right, I bought some leaps, in 2021 as well. Those are actually, I thought it was, what could be wrong in 2-3 years? And guess what? All the stocks, most of the stocks I bought literally went down in 2021 and come back in 2023. So, definitely, a lot of wounds there, but it's a small percentage of my account that I allocate to buy option, but most of them are more selling and just holding stocks or ETF, and it's been treating me quite well, actually.
So you opted for more of the income strategy from options, kind of a high probability plays. Is that what you're shooting for?
Yeah, high probability plays. what I call a Warren Buffett cash flow strategy. Really just, selling options on selling put options on individual stocks, and I get to own it for a cheaper price. I get paid, the cash flow, which is what we call the premium, right? And then I get to own the stocks I want to own for a cheaper price. And if I do get to own at a cheaper price, I have a downside buffer, right? And now I can turn around and sell some cover call as at a higher price. So agree to sell at a higher price and get more cash flow in the meantime, and just wait for the stocks to go up. Or some of the stocks I really want to hold for long term, I never want to give it away, then I just hold on to it, right? And because the whole idea is that I gotta have, for me, is I call it the fast, medium, and slow money. I talk about the TD Bank interview as well, is that, there's inherently different strategy, different timeline. I want strategy with different timeline. Our said and done strategy is more fast, like 1 to 2 month cycle. And then, our Warren Buffett cash flow strategy, selling options on individual stocks, is more like a few months. Sometimes you can get stuck for a few years if the stock price keep getting depressed, right? And then buy and hold, has been doing pretty well for the last 2 years. Usually it's kind of 5, 10, maybe 20%, but last year was exceptionally well. And this year, actually, our selling option portfolio is doing a lot better because buy and hold is hurting, right? So I always have different timeline, and just allocate 1/3, 1/3, 1/3. So at any time I feel a lot more prepared, and I feel I can maneuver the market a lot better.
What do you believe are the biggest misconceptions new traders have about generating passive income through options?
That's such a good question. Just give people a whole breakdown, right? Back then, I was doing it by myself. I was, having a full-time job, and I also study a lot at night, like 6 hours per night, whether studying the market, books, and all that. And I slowly grow into have a team. At one point, my team was 10 people, right? I have some coaches, I have some analysts, and they were my past client. I picked the best out of them, become my coaches, analysts, because we're thinking about launching a hedge fund in 1 to 2 years, right? So with the amount of resource we have, the reason why I could be more passive is because my team is doing the work for me and doing the work for my client. But if I'm doing all this on my own, right, unless I have to support certain community that I trust or have a basic understanding, it's not going to be so passive. Today, I was looking at my buy and hold strategy because I have multiple six-figure. I'm looking at deploying, right? I was looking at the target price. I look at the clock again. Oh my God, that cost me 3 hours. I only analyzed 5 stocks. Right? I was checking it. Okay, history, it dropped this much. It's not passive, right?
Why is that? Did you get swept up into the emotions of the market, watching the chart move, and the time disappeared on you, or?
Oh no, it's actually like this morning I was looking at my buy and hold strategy, right? Because my team is managing more about the more active strategy, like the Warren Buffett strategy, and our said and done. And for my personal side, this is my personal account, more buy and hold. I'm like, okay, I have these capital I want to deploy. I've been waiting for this moment, right? So I'm looking at, okay, what are some good stocks I can buy, right? I don't know if you want me to share some ticker. I'm never that guy that pump and dump anything. Anything I buy, I can't pump and dump anyway. But just looking at it, and then looking at, is that a good investment in the long term? For example, I look at the last 5 years in terms of net income, their return equity, is that solid? Has it been only growing 20% per year, but the stock price 10x? Those are, I'm like, okay, I need to wait a bit longer. I rather miss out that than be part of that, because there's more chance it'll pull back. But if it's been growing pretty good, but then get beat up because of certain reason, then those are the companies I'm looking for. So to weed through that, right? I don't know if AI can do those jobs, but that's what cost me a lot of time and think objectively. And most of the time when I can think objectively is when I don't have too much exposure in that stock yet. And that's when you're the most objective, right? So that's why I spend quite some time, and my team do more of the option day-to-day, supporting a client, or the market dropped today. Of course, there's some client panicking, right? Oh my God, right? Hey, we already have plan. Remember, it dropped 100, 200. This is what we're going to do, right? Neutral strategy. They handle that side of things, but I handle more of the strategy on long-term stuff, right? And that's kind of what I handle now.
I'm sure some of the bears are arguing now that we're in a whole new realm with the trade wars that haven't occurred in the past, or at least any time during our lifetime, and that the looking at past fundamentals don't really matter right now because we don't know our company's going to be able to give future guidance. And just what's your take on that?
I mean, isn't that the same thing when COVID happened? They kind of say the same thing. Oh, this is a new world. What's COVID going to take us? There's no guidelines. Companies that we don't know where it's guiding. But every time that happened, humanity always find out a way. And this time is really, if you really look at it, it's just really one man's action. And this man, we all know who it is. It's pretty much, overpowering, the Feds, the FOMC, anything else is just one person, right? And I talk about this in my new YouTube channel called USA Update. I think he has a 4-year plan, right? People can call it conspiracy theory or whatever. But I think this first year, I called that a month ago, he's trying to reset the market because we had a really good 2 years and before he came into office. All right. And he's trying to reset in the first year because he keep asking the Feds to drop the rate. But the Fed says, I look at all these data. Job market's good. Inflation's not too bad. Why do we need to drop the rate? Right. Meanwhile, the president is that we want to drop the rate. We want to drop the rate. He's like, okay, if you're not giving it to me, I will force it. Right. So he's kind of forcing it, in my opinion. So first year is kind of like a reset of every market. And then second year will be, kind of like finally start dropping the rate. So we're going to start seeing that rebound, right? I don't think rebound will be going to second year. I think first year already start seeing the stocks going back up. But I think the second year, going to first year and the second year of the presidency, will start dropping the rate. And then third and fourth year, will line up perfectly for a really good rebound. He can say, you know what, guys, I told you so. So that was my kind of conviction, or you can call it conspiracy theory, for the next 4 years. So that's why I'm not very worried about it. It's just more manufacture. Right? Manufacture, if you look at all the other data, has been doing pretty well. Yeah, there's some, a trading deficit from US, but that's been happening, over the years. So he really, in my opinion, his true agenda is really trying to reset it in every way possible. The market reset, business reset, everything reset. And then he has a lot more room to grow instead of like trying to carry that no momentum, no new money at all going to the market, right? So that's my take on it. Yeah.
Right. In your videos, you've discussed about getting results with just 30 minutes a day of trading. What does that time typically look like in practice, and what's being done during that 30 minutes?
Yeah, like I said early on, was a more special day because market dropped. Even my wife was messaging me, Cody, is there anything I can buy? So that's when the market is really panicking, right? He's like, I have cash. So, but typically, it's actually not 30 minutes per day because I have the team support 30 minutes per week for me, right? The last trade we put on was, it's actually per week. The last trade our team put on in the option, our set and done strategy, was actually 2.5 weeks ago. I was actually on March 17. We're filming this on April the 3rd. So, sometimes I don't want to say it's 30 minutes for 3 weeks. And people are you crazy? Are you buying and holding? But a lot of time is when you're selling option, you have a big room for margin of error because we're selling option and then our strike price is really far away. We have a lot of room for error and time is on our side. Every day that goes by, if the market don't move, we're making money, right? So we have a lot of luxury on that side. So typical day for me, to be honest, since I have the team supporting, they give me all the daily news, giving to my client, I see the same thing, right? I at this point with years of training, I don't even need to see the drawing points all that. A lot of times I will look at, okay, what's the first standard deviation, second standard deviation, things like that. I might look at it, be like, okay, we're within safety zone. Okay, cool, leave it. I don't need to do much of it. But when the market dropped today, the thing is, okay, is our position okay? Do we need to adjust a little bit? Or is there opportunity, right? Because, anyone who has cash on the sideline today could be a good day to kind of, sell some put option, things like that, right? But there could be more downside. I'm more neutral to bearish right now, but hey, if you can maneuver well, even when, the volatility index do crash tomorrow or after 3 days, you're going to make a handsome sum if if you use the right strategy on it, right? So those are the kind of opportunity. Like, is our position okay? Did any central thesis change for the last, every week I have a meeting with our analysts as well? No change. Okay, I guess let Theta do his thing then. Then I go work out and I go, build my other business and talk to my property manager and the real estate and all that stuff, right? So don't try to overdo things. It's overdoing is not making you more money, and it's actually making the brokers rich, right? So, so that's just my years of learning and paying sweat and tears. But in the beginning, yeah, of course, I'm like, oh my God, okay, every day learning new things. Oh, that could happen, right? So anyone who's coming into the market now is like, holy cow, like this is crazy, right? But but you still gotta, be a little bit more composed, right?
Right. So break it down for us. Kind of your core option strategy. What are you doing mostly of? What type of positions?
So our sun and done strategy, which is I would call it more active, like 30 minutes per week. We're selling bull put spreads or bear call spreads on the S&P 500 future option. So the ticker is called ES, right? So we are really far away with the bull put spread, bear call spreads, and then we cap the risks, right? And we know what maximum how much we could get paid, because with spreads you cap your profit, but the most of your downside, right? And we're very far away in terms of, if people are listening to this, understand what delta is. We're really far away with delta. We're really far away for our strike price, and we're just targeting.
What does that mean? Far away? Like, give us an example.
For example, if ES was a 6,100, our position was our bull put spread strike price was around 55.
So around 10%. Does that sound right?
Yeah, or, or it depends. If the VIX is higher, we can go further out, right? But typically a lot further out, because the chance of S&P 500 drop 10% maybe happen 1 to 2 times, 1 to 2 times every 1 to 3 years, right? The last time it kind of happened like that, well, I guess now we've seen one, right? But it's not even within a month, right? So we can get away with a lot of things, even when we're wrong. We're still right, because time is on our side. So we want that. So we want more safety, right? We're not targeting anything crazy, maybe 10, 20% per year. And that's kind of what we're targeting, or sometimes higher, sometimes less. But that's our cash flow, like a true cash flow, like income replacing strategy, right? The more active, but we don't need to pick any ticker. We don't have to do any stock analysis, really just macro news. And what's the technical doing? And we study the institutional money and make sense and thinking, when they're doing this, why are they doing this? And we track, other stuff, institutional level stuff, right? As much as we can get on. That's our set and done strategy. And then the other strategy is really, I just want to hold stocks at a cheaper price. So I go sell put options on individual stocks or even on ETF, right? I get paid premium up front. And I truly want to own it. But if I don't get to own it because the stock price didn't drop enough, so be it. I rinse and repeat, right? So that's our Warren Buffett strategy, right? And then, of course, I have my buy and hold, another 1/3 of my portfolio, which is buy and hold. And those are kind of like, any good stocks get beat up, right? I'm watching a few stocks right now. It's very close to my target price. Then I'll just start loading up on that. And I know that sometimes selling options might not cash the movement. So I will go buy with cash. I'm not selling any option, right?
So in on the subject of risk management, do you use any kind of risk management, or is it built into how you structure your option strategies?
Yes, very good question. So in terms of buy and hold, as I'm kind of like Warren Buffett, unless something about the stock fundamentally change, I will not get off, because even in 2009, nothing really changed for most of the stock, but most stocks dropped 50 to 80%, right? So it was actually a good time to buy more instead of just cutting the losses and all that. So buy and hold, I don't do so much of risk management, but in terms of option, yeah, I mean, for the Warren Buffett cash flow strategy, first of all, you got to do your fundamental analysis, really make sure as for example, the P ratio is not out of whack, or companies have only been growing 20% per year, but the last few years, the stock 10x. Those are the things I'm not even touching it. I like to catch it early on things so the risk is lower. But if I catch on one of that and drop, 20, 30%, I'm like, oh, I make a mistake. Yeah, I'll take losses. But then I have to balance that off, right? That doesn't happen very often, maybe 5% of the time. That's okay. I still, bite the bullet 5% of times, okay. Now with our set and done strategy, then, because there's more active trading of 30 minutes going on, we have to, with market like this, we have to adjust it more frequently. But the market's been doing really well in 2022, 2023, 2024. We don't have to do much. And we're actually double the return of S&P 500 with 30 minutes per week. But this kind of market, because it's so volatile, everything's just fly everywhere. Right now we're spending the most time on our set and done strategy. And buy and hold just either they're already down, or hey, there's cash, I can buy more. Make sure our portfolio sizing is fine. I don't put too much money in one stock, right? But I don't have more than 10 stocks in my portfolio. So,
in your videos, you've mentioned about leaving a good buffer in your trades. Can you define this for us? And have you found an optimum level? And does it vary with volatility?
Yeah, very good question. Leaving a good buffer. So buffer means different thing for everyone. Some people might think buffer means higher price, very bullish, right? But to me, like my whole team, or especially because, I come from engineering background and now have a little bit more asset than 10 years ago, right? So for me, it's more about protecting what I have. So preserving capital is the number one goal. Continue to grow it or outpacing the market is secondary, in my opinion, right? So when we say we leave a buffer, there's many ways. For example, I don't go for stocks that, like I said, 10x over the last 3 years, meanwhile, growth only 30%, but everyone talking about, okay, those are out of the way, right? That's like one risk management / buffer that we use. But before I think about, okay, actual option trade buffer, yeah, I mean, whenever the stock or the target ticker pull back, the more it pull back, the more it pull back, the less likely it will pull back more. Whereas most people think that whenever the stock come back, oh my God, the company is going bankrupt, it's going to zero. So people usually think that way. Oh, if it dropped 20%, oh my God, it would drop 40%. No. If it dropped 20%, that means there's less likely to drop it to 30% if it's a good stock, if it's S&P 500. But if it's going up like this, oh my God, I'm like sweating. I'm like, when's that pullback going to happen, right? So when it's kept going up, my buffer is actually further. But when it starts dropping more, my buffer is actually smaller. And this is when we make a lot of money because, like you said, the volatility goes up, but it's less likely to drop more. But, sometimes when we're more careful, neutral and bearish, I'm like, hey, I still keep the same buffer, for example, further away from the money, right? From the stop price right now, but we can make the same amount of money, if not more, because of the high volatility. So to me, it's like, same buffer, even more buffer. Now I can high instead of 10% away, I can high 15% away. Get paid the same percentage, right?
Right. So you're talking about, instead of selling an option 10% out of the money, maybe you go 15 or 20 and you feel comfortable with that because the VIX is higher and volatility is higher. And so you could be getting the same premium that you were at just a 10%. So you're encouraged by a big drop because now you can set your put options even wider, even further away from the current price. Is that accurate?
Exactly. And also in terms of probability, like I said, most people think the market dropped 20%, it'll drop to 40%. But actually, in terms of probability, if the stock already dropped 20%, it's less likely to drop another 20% comparing to stay here would go up. Does it kind of make sense to you, Ian?
Yeah. So, but a lot of people would say, well, over what time frame, right? Because many stocks can have slow kind of grinding bear trends that, it drops 20%. Yeah. Then it has a rally and a relief rally and you think everything's out of the woods. But then over the many months in the future, it starts to grind down again. So what kind of time frame are you looking at on selling these put options for income or to acquire the stock at a cheaper price?
Yeah, usually I'll say anywhere between 2 weeks to 6 weeks. Usually that's what I'm looking at. Sometimes it go up to 2 months, right? But like right now, the market is moving a bit faster, so we adjust our expiration date shorter because we want to capitalize more on the theta of the time decay. So we're adjusting to it, but typically we want to drag it out a bit longer, right? And that just, we make less return and we drag it out longer, but we sweat less and we're less sensitive to any of the market movement. But right now it's just very move too fast. I don't want to sell it too far out and everything change, right? So we're shortening our expiration date right now because of that. If that makes sense to you.
When implied volatility is really high and thus pushing up the option premiums, making them very juicy, wouldn't you want to lock in kind of long-term prices by going out many, many months because it's like, oh, this is a rare opportunity. I can lock in, they say, the next 6 months at these high option premiums, and then I don't have to do anything else.
Yeah, you could. But for a sudden done strategy, when we're doing spreads, right, we don't want to do that because what if it dropped another 10% more and it continued to stay there? And, our active management strategy in terms of what are we going to adjust the position, what are we going to roll the position and all that, we're very limited on that side of things, right? So, we can drag it out on that side. Like for the Warren Buffett, selling option strategy and then buy and hold, drag it out is a good idea, right? Even Warren Buffett did it, right? 2009, he signed a 10-year contract selling and put options on the SPX. He made tons of money and say, I bet in 10 years, SPX won't be here. Right?
Wow, that's a really long. That's an incredibly
if you
long
guys
duration.
Google it up. He went in, big banks and did a, I wouldn't call it under the table, but do a private deal, right? Bet against the big banks. The big banks is that you want to take that, yeah. So he took that. We couldn't do that, right? For most leaps or anything, we can only go 2-3 years out. But because of his assets, he can do 10 years out, right? So we could do that for a more long or medium term, like selling put. I don't mind doing it. But then for our more, sudden done strategy that's cash flowing really, I'm hesitant to do that because of the reason I mentioned above, less adjustability, right? And then, because of there's other reasons, right? Other variables, you probably know what I'm talking about. There's other variables that will lock you in and be like,
Right. Your strategy seems to fit those who already have money. For those needing to trade for a living, for income, would this work well?
No, I'm not the guy.
Well, you're not the guy. Okay.
Let me take it back. I will say a lot of my clients who are attracted to me, or a lot of my friends who are attracted to me, already have more than $100,000 net worth, right? And then they might start with a smaller account, right? 30, 50K, but they can scale up a capital faster, right? But I don't have a lot of clients that say, hey, this is my last $10,000, Cody. I need to flip it to $100,000. Can you do it for me? I'm like, first of all, whether I could do it for you or not, I don't think the time frame is right. And I don't think your mindset's right. So I'm not the right person. I don't want to bring that stress onto my team or myself to do that because no one can promise that. But if you're like, hey, Cody, I have 1 million, can we grow at single digit per year or at least protect my capital, just kind of living a life you're living, traveling everywhere, right? To 12 countries in 2024. Yeah, I can help those people because there's a lot less stress and it's actually what I'm doing, right? So I'm not actually scalping in the market. I'm always trying to say, how do we dodge all these volatility event, right? All these liberation day. Like, can we really close most of our trades before this day, right? Like, what's the next one? I'm literally tracking like Donald Trump's Twitter. Anything is like, is that real? Is that not real? Did he give a day? Is there anything structured that we can dodge it? If it is, close our position few days ahead of that, ride through it, right? Nothing, don't have any position through it, right? That's kind of like, we have to adapt with what we have, but usually when Donald Trump is not there, then, it's more structural, right? FOMC meeting, CPI, PPI, this and that. But when Donald Trump comes in, he's just like, swaying everything around, right?
How much do annualized option yields vary depending on the volatility ranges and whether it's an ETF or a big cap stock or even a smaller cap stock? Because I've noticed there's a big difference depending on which stock or ETF you choose.
Very good question. I going to be straight up with you. I don't trade small cap. Most of the companies I ever touch is 20 billion plus. That was the rule I set in 2020. Now, with all the available money, maybe 40 bill, 50 bill, maybe 100 bill now, right? Only the biggest blue chip I'll touch, right? So, if you look at high volatility stuff, you can look at 4% per month, but it's not guaranteed per month because market can go up and down. Sometimes the, stock goes down, right? And, for less volatile, even just S&P 500, if you go sell put, you make maybe 6%, if that, every year, right? Running those strategy on it, right? So, anywhere between single digit to 50% per year. But if you go like smaller cap, high volatility stock, you can go 100% or more, but how sustainable is that, right? The more percentage you go, the less sustainable it is just based on probability wise. So how do you stack those probability, right? So I hope I don't confuse people, but really I stick to the higher probability trade. I always focus on how do I preserve capital? How can I be less wrong? If I'm wrong, it's a small percentage of my portfolio, so it doesn't impact the overall growth. And as long as I'm beating the market by a little bit, I'm beating 95% of the fund managers out there. But even if I am shy of a little bit in a few years, even if the market is down 10% right now, like our said and done strategy is actually break even. So I'm very proud already. We're break even. My friends are like, did you dodge it? And we're like, no, we didn't dodge it. We still have 25% position going into it, but because we're maneuvering it, right? So we're already at break even. Right. So, but for a buy and hold, yeah, of course, since all time high is down 10%, someone's down 20%. Right. That's why I'm putting in more money. Right. So there's always pros and cons, but I really think the people who are focusing on return, Cody, I want more than 20%, 40% return. I'm just not the guy per year. Right? I'm not the guy. I don't want to sell false hope. I don't want that kind of liability or responsibility. But if you're like more boring person, you have a bigger amount of money, multiple six figure, then I could potentially, be that person to help you if, making sure you're doing the right thing if this is what you want, right? So,
so over the years, both in the kind of the bull years and in the not so bullish years, like say 2022, kind of what's been your performance for your different strategies, and when does each strategy shine and when is it weak?
Very good question. Because I get asked that a lot and I track it a lot. That's why I have 3 strategies, said and done. And then the Warren Buffett cash flow and then buy and hold. Buy and hold last 2 years, it's beauty, right? Since the drop of the beginning of 2022, right, kind of went flat for a year and started going up. So 2023, 2024, anyone is like, Cody, why do you guys do option strategy? My buy and hold is up 30%. I'm like, yeah, mine's up 50. But that doesn't mean anything. Right. So for the last 2 years, it's been like that, right? I don't have anything fancy, even if you just have QQQ or whatever, it's up a lot. Right. But then during the flat year of like 2021, at the end, it kind of dropped down to 2022 to 2023 is actually kind of flat going to first half of 2023. Our said and done strategy was 36%. I share that with all my clients and all that per year. Right. So that's when it's shy. So flat market with a bit downward trend, selling option strategy will work better, assuming you don't panic, do anything crazy, and you know what you're doing. But on the crazy up market, selling option strategy will lag the market, will lag the benchmark because the VIX is a lot lower and we're not like chasing it. We're not like, oh my God, it's going up. So let's go closer to it. Let's go more aggressive on Delta. Like we're actually staying more away. It's like, when is that drop happening? When it drop happening, that's the only time we kind of go in and be more aggressive. So on the up year, especially gradually up, we have a chance of beating the kind of benchmarking, but on the more than like 30 degree, it's hard for us to catch it. So that buy and hold will catch that. 1/3 of portfolio catch it. Right. But I'm doing the flat or a downward year, right? Or just like neutral year. That's where 60 to 70% of the time, actually, right? It's more like range bound, slightly going up. Then we'll catch that with our option strategy. So hope that answers your question.
Right. So with the VIX now at 30, does that mean that selling puts will generate twice the yield that it did when the VIX was at 15?
It's actually more than twice.
Oh, it's more than twice. Oh,
it's more than twice.
Mm.
Yeah. Yeah. I don't want to, I'm an engineer. I'm a math geek. I look at all these based on numbers. I don't have feelings for it. Like right now, make money, lose money. I don't have feeling for it. But yeah, when we study really into how does, there's three things, right? VIX, and there's the individual stock implied volatility, right? And then, there's the stock price and all that. But when VIX really doubling, right? Amount of premium, it's not just double, it's actually more than double. When it go from 15 to 30 to 60, you think it's 4x, but it's actually more than 4x, right? Because there's, I don't want to bore people. There's that gamma thing going on. There's that acceleration move. So it's actually more. So that's why it gives us more chance to say, hey, either if we want to do the same expiration day as strike price, or can we go more, be more conservative? We can make the same amount, right? So that's a decision someone could make, right? So that's just my observation, but that there's a lot more variables. People are like, oh, Cody, you're wrong because I did this. Because we're talking multiple variable, but if we just talk about straight up VIX difference, that's what our observation told us.
So when looking at options, I noticed that for the different strike prices, they have the probability of being out of the money, and one can look at that, say, oh, is a 70% chance of being out of the money. I should be safe when I sell this option. I have a 70% chance. But doesn't that probability change on a daily basis depending on the volatility itself, its own implied volatility?
Yeah, we open Ian, very good question. We open a can of worms. If delta, because I'm assuming you're talking about delta, right?
Yeah.
If delta is the holy grail, AI will take over our job already. But because delta is just one thing that people like, if they just trade straight from delta, they're very mechanical. It's like, Cody, I open trade today, I close tomorrow, I open trade today, I close today, whatever. But a lot of time they forget to look at, there's Black Swan event, there's Donald Trump event, there's FOMC event. There's a lot of variables out there that will screw those delta, screw those 75% within the day, right? The moment you start getting closer to your stop price or your strike price, all of a sudden delta is like, oh my God, like Cody, like it dropped really fast. And then when below is like, okay, Cody, now it's 1-to-1 now. Like, what's going on? Right. So like, I don't think probability could be looked that way, but there's no formula you can calculate. A black short is just a very rigid formula that kind of tells you, but that's not the real probability. That's why our team are always looking at how do we dodge some of the event. We're okay leaving a little bit of money on the table. We look at, for example, the Liberation Day. I was telling my team, Liberation Day, okay, more upside or downside. Everyone's like, downside. Exactly. So if we have bull put spread, can we close some of it? Only leave 25%. They're like, yeah, it kind of makes sense, because what's the chance that will go up? Is Donald Trump going to say, I have mercy for you guys, but he's like going to do something innovative that shock everyone anyway, right? So the chance of the upside or even staying still, it's so low. So we actually should have some bear call spread, more bearish position, not too much, more neutral and less bullish position. So that's the way we position it, right? We have a little bit of bias, just based on, not just based on technical, not based on just delta, be like, based on what Donald Trump is going to do and how people is going to react to it, right? So that's kind of like, how do you quantify that? I don't know. Like, do we go from 75% now to maybe 65 because it's more likely to drop? I don't know how to quantify that, but we adjust that based on our capital exposure, right? We have our limitation in any situation, but all we could do is we just expose less. How's that? If we miss out less. Then what's up? We miss out, fine. Everything's good now. Okay, we can put on more position, right? So we're not trying to maximize on it, but I can't answer that probability question, right? If anyone thinks the market is efficient, they shouldn't be following me. I just don't think, if math is a thing that you can win, all these PhD or all these AI would be dominating the market already, right? But it's not, right? Why is the old Warren Buffett still beating everybody with his old brain, manual, everything is manual, and still winning? And there's got to be, more than that, right?
I see. So during the meme stock craze in 2021, when implied volatility is not just on these meme stocks, but seemingly just about every stock shot through the roof, did you take advantage of any of that? And if so, what kind of positions did you put on to take advantage of those really high volatilities?
No, I didn't take advantage. I was riding out very happily. So I go into first half of 2022. I was hit too, right? Because of the good growth stock or the bad growth stock were pulling back, right? Some of them I really have to cut losses as well, right? Just full transparency. Like at that time I didn't have enough cash, because at that time we're writing off 2022. We're like, okay, this is gonna be good. Who knows, they're gonna raise the rate, in the beginning of 2022, right? And then really shock the market that way. And my real estate, same thing. Like I have real estate too. So I was actually taking a hit in terms of price. I'm from Toronto, Canada, right? Right now it's dropped 30% since all-time high, average wise across the major city.
That much for real estate?
Yeah.
Wow.
Yeah. So our that's, for example, our single family home in our core city. Right now, it's the same price as 2017. So think about that. So I can go, because I look at all those transactions, I'm like, I can go buy the same house in 2017, and they renovate it too. Wow. But so you see a lot of that, right? So like a lot of people think, Cody, what do you do to take advantage of it? I'm like, if I say I'm not going to touch meme stock, I'm not going to touch meme stock. I will continue focusing on doing the right thing, even if during certain months or a year I lose money, because I know I make money long term. But I do not adjust out of my rules and say, hey, I think this is a way I can pull a fast one. I can make money just for the short term. I don't do that. I'd rather miss it. I get laughed at. Then long term, people like, Cody, what do you do? Now you jump from meme stock to gold stock to crypto. I'm just a stock option guy on S&P 500 blue chip. I'm that only guy. I'm boring, but that's how I've seen the rich people continue to get richer. But whereas all the other retail traders, or all these influencers, if you look at them, like this year they're talking about crypto, next year they're talking about gold, the mining stock, then I don't know, go e-commerce, now drop shipping. I'm like, dude, does that mean does nothing work, right? But you have to sit through those years that are not doing well if you have such a strong conviction about your stuff, right? Or
could you go through?
Adjust, right?
Yeah, could you share a little bit of what are your core rules, if you have them?
Yeah, core rules. Like I said, company less than 20 bill, really now is like 50 billion market capital. I don't touch. I don't care how good it is. And any stocks as OTC, definitely don't touch. So I really, like I said, I really try to rule out a lot of things. So there's only a small basket of things I can touch. And a lot of time, what I like to do is, instead of me doing research on this company, think I have a better knowledge. No, I just look at the most well-known investor, right? Warren Buffett. At the beginning of today, before this call, I was actually, the reason why I spent 3 hours, I was looking at Singapore GIC fund, their GIC fund. So they have 3 funds. They're, kind of like their pension fund, right? Canada pension fund, US don't have one. Donald Trump is trying to start one, right? Their pension fund overall is making 3 to 5% per year, true return. But I was trying to look at how they break down the portfolio and what are the heaviest holding, because if their heaviest holding means that they have the strongest conviction. So I like to start with, Warren Buffett's top 10 holding, Charlie Munger's top 10 holding, Bill Gates' top 10 holding, Jeff Bezos' top 10 holding, Elon Musk's top 10 holding, and say, okay, yeah, those companies don't work. No, don't fit my criteria. Okay, I only have 10 left. Okay, that's only 10 I can look at. I like to look at from that standpoint, so that everyone do the work for me, and in my opinion, I pick the best out of the best to sell options. If I'm wrong, chances are a lot lower than thinking I have the resource, I have the vision that these people don't see. I'm like, what's the chance of that, right? So I really just trying to stand on giant shoulder, and my clients stand on giant shoulder, right? So I want to stack all the odds in my favor, and I don't want to do more work. I try to do less work. If less work makes me more money and give me a better lifestyle, I'm happy with it, right?
Hey guys and gals, it's Tessa. Sorry for the interruption. This is going to be quick. These interviews take time and dedication to do, and honestly, we hardly make any money from it. Enough to cover expenses of running a podcast, though. But we do it because we love contributing to the trading community. And all we ask from you, our dear listeners, if you love Chat with Traders, please be generous and give us a like and subscribe to our channel and tell others. This can be your way of letting us know that you love the podcast and so that we can keep it going on forever. No, just kidding. Not forever, but for as long as we can. On behalf of my co-host, Ian Cox, and I at Chat with Traders, thank you so much. Now back to the show.
So I noticed when I look to put on a trade, for example, shorting puts, and the amount of buying power required to short the puts is almost always considerably less than the all-in cash required for acquiring the shares. Do you use this additional leverage for some of your positions?
Never.
Okay.
For a said and done strategy, we don't even deploy more than 50% of our capital. For example, if you have $100,000, we calculate in a way, for example, the maximum amount of loss between our spreads, we don't use more than 50% of our capital. So that way, if market drops 30% like COVID, we're never going to get margin call, right? And a lot of times it's 0 to 50%. And with that, we start targeting, like 10, 20% per year. So, I mean, what else? Because I don't want to fly so close to the sun, right? That's the way I look at it, right? And if we take a step back, you say, Cody, I was asking you just about selling options, your one Buffett strategy, selling put options that I want to own stocks I want to own at a cheaper price. Yeah, still, I don't. Your broker will give you to use the ability to use 3 times of your cash money. Doesn't mean you should use it.
Mm-hmm.
All right. So really sit on that. It's kind of like, I don't know how to put this, right? Like broker has a different agenda than you. They want you to trade. They want you to take action. They want you to day trade. They want you to second trade almost, not day trade. They want you to hour trade, minute trade, second trade. The more transaction, the better. So how do we do that? That's why in casino, they give you a chip. You don't feel the money. They give you a chip. They give you a credit card to try to distance yourself from that feeling of money. But that is when it's kind of like you go to casino, okay, I'm a millionaire, but I'm only going to spend $100 today. Everyone's laughing at me. I'm like, Cody, come on, 1,000. I'm like, no, it's just 100. I know I'm going to lose it. It's for fun. And I'm going to tip really well. So everyone's happy. Hey, if I make money, I'll always tip you, right? So like you got to have those mindsets. What is that limitation? If you only have $100,000, that's the maximum you will use. I don't use leverage because leverage is a double-edged sword. You're laughing. You think you're genius when the market goes up. But whenever the market turns, you're that first one to go, right? So I was actually looking at, like some wealthy people, they suggested me to look at, asset-based lending, right? Security-based lending. For example, if I own, let's say, $100,000 Microsoft, they will go 2 to 1 to lend me $50,000 out. But then when I read all the fine print, they're like, oh, by the way, it's just like margin call. If it goes down more than 50%, we're going to call you better have money in one day, or we're going to sell it and you're zero out. I'm like, hold up, Microsoft. Okay, last time I went, holy cow, in 2000, it took them 13 years to come back. Holy cow, and dropped more than 50%. Okay, what's the chance of that happening? Low, but who knows? So anytime I see those kind of probability happening, I'm not looking at how much more money I can make. What's the point of doubling your $100 to 200, 200 to 400, but then all of a sudden you lose 90% of it. You lose 90% of 400, you back down to $40. That's less than $100 when you started, right? So I don't want that. So I hope people can learn from this kind of thinking. It's like, what's the worst case if there's a chance, kind of like what Charlie Munger said, right? If you know how you're going to die, just don't go there. And I even chat GPT and asked, does Charlie Munger, Warren Buffett use security-based lending, any leverage? I asked so many times in so many different ways. The answer is always no. That's why you never heard them blow up their account. Meanwhile, all these hedge funds blow up their account, averaging once every 4 years, they blow up their account, right? So when they try to get the alpha, they always forget to look at the downside, right? Everyone's looking, if this work out, that work out, this work out, then this. Yeah. But it's like, most of the time, it doesn't work out that way. So how can you say, if this doesn't work out, this doesn't work out, this doesn't work out, hey, time is still on our side, stocks don't change, we still make money. Okay, I'm like, sign me up for that, right? So very different mentality than a trader and gambler and all that.
Right. So to wrap things up, what do you struggle with most as a trader?
I would say every day is a new learning experience. With I was just having this meeting on my team. How do we identify the next risk that we can dodge? I would say that's what we struggle the most. We're not looking at, what's the next event that we can capitalize on? We're looking at, when's the next time Donald Trump may say something crazy, right? I hope he's not on his toilet tweeting too much. But like, when's the next time? If there's anything structured, we have a calendar that put in. Say, okay, what's the impact of that? Well, are we bearish, bullish? Okay, we will adjust our position before those days. That's what I wouldn't say struggle, but we spend the most time on. Otherwise, most things, like we said, more said and done. But with a wild card of a US president and we trade S&P 500, I would say that's our biggest struggle, because all the nuance of like the probability of figuring out what's the maximum capital we could use, what's the strike price, we already have those figured out. But it's that most wildest card that I can't call Donald Trump, right? And Donald Trump might tell me something he will change tomorrow. So what's the point? But it's like, okay, how can we identify those events? If we dodge 90% of it, there's only 10% left, we're okay with it, right? We put in our best effort. That's what we struggle. I wouldn't say struggle, but spend the most time on.
Well, Cody, I'd like to thank you for coming on Chat with Traders.
Yeah, thanks for having me.
Yeah, and how can our listeners reach you?
Oh, yeah. I mean, if you guys are interested in learning more about stocks investing or stock option investing, I have a YouTube channel, about 32,000 subscriber. Type in my first name, last name, investing. So that's Cody Yeh, C-O-D-Y, and last name Y-E-H. Investing, you can find me. And if you're interested in more like the general economical, geopolitical stuff, I opened a new YouTube channel. It's only 1 month old with like 64 subscribers. It's called the USA Update. If you can't find it, type in Cody Yeh behind it. So the algorithm will help you find me. And you can find me there.
Fantastic. Thanks for coming on the show.
Yeah, thanks for having me.
You've reached the end of this episode of Chat with Traders. But rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes. And we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.